Brad Williams, Frugal Finance. Have you ever done this? If you're an investor, perhaps you're a day trader, perhaps you're in a hurry, perhaps you're listening or watching something from the talking heads on TV. They're pumping some particular investment. You, in a rush, just go online, you grab the first stock quote ticker symbol, and you input it, and you buy 1,000 shares of ABC company. Well, ABC was not the company you were supposed to buy. The symbol was ABBC, and here you are. A week later, you didn't bother checking your confirmation statement. You just went about and you're watching ABC, and ABC's losing money. And you're going, what the heck? What happened? Happens all the time. Yeah, you're in a hurry. You don't pay attention to the ticker symbol, and you end up buying the wrong stock. Stock up on information before buying stock. Here's some tips from FINRA. And I'm also giving you my insight. Make sure you enter the information correctly when you're buying stocks. There are well over 20,000 companies whose shares trade either on the U.S. exchange or in over-the-counter markets, each with a unique ticker symbol. With so many companies and trading symbols, there's ample opportunity to confuse one company's ticker with another. Good reason to carefully research any investment before making a purchase. They call it a fat finger on Wall Street. You have professional traders, and they do this 10, 12 hours a day. And sometimes they also make mistakes. You, as a retail investor, probably prone to make more mistakes. Why? Because you get that adrenaline high, thinking I'm going to make a ton of money because I got this hot tip. So you enter it in and you just don't follow the steps. Well, if you go to your brokerage account, they have multiple checkoffs. It's sort of like if you're a pilot, you have to check off each step as you move along. Well, the securities industry understands this. So in your brokerage account, they're going to say, all right, that's the symbol you entered. You sure that's the correct symbol? Yes. Are you double sure? Yes. And you go ahead because your adrenaline is pumped up. Next thing you know, you bought the wrong stock. Make sure you're buying the intended security. U.S. company stock symbols can contain up to 5 letters and might resemble the name of more than one company. In addition, symbols can be changed or reassigned. When placing an order, make sure that the symbol you entered corresponds to the company whose shares you intended to purchase. All right, I'm guilty of this. I bought an oil company. Well, there were 2 names. And they're both the same, but they're different companies. One was an actual driller, and the other was the retail side. Oops. It didn't matter. It was a long-term investment, and the company was acquired recently. But even though you think you're buying the right company, maybe it's not the company you had in mind. For example, in early 2020, some investors saw an opportunity to capitalize on the sudden surge of virtual gatherings through Zoom video conferencing software by purchasing the company stock. However, there were potential for confusion between the 3 different companies with Zoom in their names. You had Zoom Technologies, Zoom Video Communications, ZM, and Zoom Telephonics, ZMTP. Investors who wanted to purchase ZM might have been disappointed if they acted too quickly and ended up with shares of Zoom or ZMTP. Research the company, do your homework by thoroughly evaluating the company before you purchase its stocks. While the internet has made the research much easier, it's also home to misinformation. Verify any information you've heard about in a company against its public filings. Now, what I do on larger companies, I just go and I will do a query search on Google for investor relations. Large companies will have an investor relations, and you can delve into their SEC filings, and that's my route. Otherwise, you can go this SEC EDGAR database. It has the same information, but the format, it's really hard to read. It's up to you. So for example, if you wanted to buy Apple or you want to research Apple, you could go in to Apple, just type in Apple Investor Relations. It'll take you to their website. There, you're going to have just an endless source of data. Otherwise, you can go to SEC EDGAR database. And if you don't know what a 10Q is, a 10K or a 4R or any of the many required documents that companies must submit, you're going to get lost. So I suggest you warm up with something like Walmart. Not Walmart. Go with something like Target. Why? Target is a US-based retail store. Target is just the recognized, there's nothing secret here. The good thing is Target doesn't do anything fascinating. They're just a grocery store or they're a retail outlet. There's no secrets there. They're easy to evaluate. They're easy financially to read their financial data and understand that they do very little hedging. They don't have a lot of subsidiaries. They haven't bought a lot of other companies. They don't have holdings. They don't have cross holdings. So it's really simple to start with an easy to understand company. Then, if you really want to challenge yourself, read Citibank financial information. Their 10K is over 1,000 pages long. Yeah, it's ridiculous. But if you're going to research a company, that's what you have to go through. Find out where the stock trades. Many stock information services will tell you where the stock is listed or where it is quoted over the counter. I'll have a video on what this means. Companies listed on NASDAQ or the New York Stock Exchange, CBOE, or other registered national security exchanges generally have to meet defined quantitative standards that the exchange sets. There's also a thing called the pink sheets. Pink sheets are rejects. They're shell companies. They're companies that sell for 2 cents a share. Stay away. They're notorious for pump and dump, and I know the retail sector and Reddit and what have you, you're going to see all this crap and they're pink sheet scams. Mind your Qs. A 5th letter Q at the end of a stock trading symbol often denotes bankruptcy status of the quoted company. That in mind, securities of a company in bankruptcy might continue to trade after the company has filed for bankruptcy protection and before it emerges from those proceedings. However, investors shouldn't interpret that as indicating that the shares have any value. Bankruptcy is bankruptcy. You, as an equity investor, will lose everything in a bankruptcy. Understand the IPO process. An initial public offering, or IPO, is a way for a company to raise capital by selling shares of its stock to the general public. The unicorn stock. Okay, the most recognized would be Lyft or Uber. Those two companies were the recognized, and they were private. Venture capitalists held huge positions. They wanted their money out, so they took the company public. You, as an investor, had an opportunity to participate in that. But keep in mind, and here's some statistics that are a little weird. I think there were 288 IPOs last year. Most are losing money. There were 272 the previous year. I think there were 200, and I was reading this recently, there were 280 in 2001. And then 2000, there were 1,300 or 1,200 IPOs. And if you look now, you can just go to Google and research IPO performance, and 85% of them are losing money. So be careful when you play around with this IPO game. If you think there's going to be a huge pop and you get into a hot, overhyped IPO, if you're lucky enough to get shares, perhaps you can make some quick money and then get out. A lot of people like to do that. They like the speculation side of the stock market. Otherwise, keep in mind what you're doing. Make sure you slow down a bit, but make sure you're accurate, and there's always opportunities. Just don't make a fundamental mistake by a fat finger in entering the wrong symbol. Or worse, are the number of shares. You meant to buy 100 shares and you bought 1,000. Or the phone started ringing, or your boss is yelling at you, and you put in to buy 100 shares. Somehow it ended up being 10,000. Let me know. Comment. Let me know your experiences. Have you walked down this path? Have you walked over the plank and ended up with the sharks? Let me know. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped. See you soon.